Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Wednesday. It is Wednesday, February 6th, 2019. Hope everybody had an absolutely amazing day yesterday. Welcome to the Daily Market Commentary. For those of you new to the channel, do me a favor, click that subscribe button down below, hit the notification bell so you get the updates as they get available. Let's go ahead and dive right in, starting with the S&P. Now, S&P were down about 2 points. And on yesterday's DMC, I had said, I just really don't want to force anything. And I'm glad I didn't, because there wasn't a whole lot of movement yesterday. Not a whole lot for me to kind of jump in with. We came down and rallied back up. We pretty much ended the day close to where we began, without any strong movement one way or the other. Last night we had the State of the Union address here in the U.S. And, no big surprises came out of that, which, was always something to consider and to think about when the president is speaking. So, we may have a potential for a breakout above this region just because we've been kind of chopping below it. So if you're interested in that, there's an opportunity there. But I wouldn't really force anything, and I would wait for high probability levels, right? My big picture is still telling me to be more of a buyer, and we could be setting up for a potential breakout to the upside. In Nasdaq, the NQ, we rallied up yesterday as well. Same story. Not a whole lot else to add there. We are definitely putting in a little bit of some slightly higher lows right through here. Okay, so there is that potential right there. Earnings season is kind of winding down, and so since we're at the tail end of earnings season, we're going to get a few more opportunities for longer term positions in individual equities, which will then in turn affect those indexes. Next, crude oil. So crude oil, another one where I said yesterday I anticipated a little bit of a pullback. So for those of you that are in the iron condor, we have our we talked about an iron condor position in crude in the Traders Army live trading room, and a number of people are in that position. And I said, we're taking a little bit of heat. Yesterday I talked about a little bit of heat that we're taking, and we've pulled back from that area pretty well. Now, the other thing I talked about yesterday was the potential on a candle-to-candle style of trade, and kind of getting short below the next candle's low, and that's exactly kind of the setup that we had. There was a really nice move out of there for those of you that were able to kind of capitalize on that. Now, we are starting to get another bit of weakness kind of coming out of this most recent move down, and so we'll see if we get an opportunity for a reversal coming up into here sometime in a little bit. If I move to a 15-minute chart, going to a smaller time period, I would anticipate that this candle may get fully retraced, but I'm going to take the area above. The area above, to me, is one that could serve as a decent retracement. So I'm going to wrap some lines around that area. If you're so inclined, I think that one could make a decent little reversal trade off the 15-minute chart. So let's take a look next at gold. Now, in gold, position to talk about, we had this level right here, the 1321.1, which was if you take a look at this particular candle, our high was 1321. So we didn't quite touch that level. It just, talk about being nicked by a tick, right? You quite literally missed it by one tick for entry. So what does that do to the trade? Well, in my mind, that lowers the probability that the trade's going to work the next time through. So I need to convert it to a confirmation style entry. So this converts to a confirmation style entry because our probabilities wind up being a little bit lower. Still a potential for a breakdown below this area here, and that would be actually below the lowest wick here. If we base in front of it, but still valid, still there, just missed it by a tick, which I will tell you is so frustrating. All right, next, looking at our bond markets. So in bonds, we had set up a potential reversal area for the bonds. Up here on the hourly chart, did not quite reach it as of yet. We were basing yesterday, did get right at the European market open one pretty big candlestick But basically, we've got some tiny candlesticks here that I would just wait for retracement back into this level. Nothing to add. In the Aussie, we had a confirmation style entry, and price came to our confirmation style entry and blew right through it. Now, that's why we do confirmation style entries. That confirmation style entry was in no way effective. So since that confirmation style entry was in no way effective, it continued to trade down, and it traded down really until it got to our next level of demand. Now, our next level of demand was on this 15-minute level, and it's done a little touch and move away from there. Now, this is a 15-minute level of demand, I'd like to add. So since this is a 15-minute level of demand, now how do I know that it's a 15-minute level? I have a purple line there. If you're not familiar with the lining, the conventions that we use for coloring of the lines, go to tradersarmy.com. Underneath the free trading videos, we actually have a video on what do each of the lines mean. But this 15-minute level, we have gotten a move away from it, and it's been about more than six candlesticks. So I would take your stop and move it to break even. So if you took that Aussie, take that stop, move it to break even, as it's had a pretty nice run, but move it to break even because I think that's about where it's going to be. Next, in the euro. So the euro trade, yesterday we talked about the breakdown below this area, and if you missed the breakdown, then it's set up for a really nice reversal. Let me know in the comment section below if you took the euro short. That euro short is continuing its move down. We've gotten a really nice move out of that euro. So if you've taken that, you're coming close to your ultimate profit target. You've gotten at least a 3-to-1 reward to risk out of this trade. You're probably sitting at about a 4-to-1 at the very least. I would move the stop down to this area right here, just above the demand, 4428 on the euro. That would be where I would take and adjust that stop just to lock in some of that profit. That gets you greater than a 2-to-1 reward to risk, and it still gives you room for price to continue to run. Canadian dollar. Now, in the Canadian dollar, this one I was completely wrong. I anticipated a bit of a reversal off of this level. So price came into this zone. We got no reversal whatsoever, and it just kind of blew right through it. So now I'd have to look a bit higher, although I don't think it's going to get to that level anytime soon. I'd have to look to this area here for my next reversal point. And this is kind of a head and shoulders pattern, if you can see this head and shoulders pattern that was put in, where we would anticipate that price would continue to go lower. And if it does, you do have this area down here as potential. It's really both of those areas, but as potential areas for demand coming into that region. So right now we're kind of in between demand and supply on the 1 hour time period. But if we get the retracement back up to here, that's your best entry, is that level up in there. Last, certainly not least, the Great British Pound and the Japanese Yen. Looking at the Great British Pound, we have this confirmation style entry, which then we turn into a breakdown. And so the breakdown is working out pretty nicely, although we've just kind of been basing here a little bit, and that can continue to move. So your Great British Pound breakout, which I talked about yesterday, has been effective and allowing that thing continuing to run. The Japanese yen, yesterday I talked about, if you're more, that was putting in a little bit of that, kind of that basing pattern, and it's continuing that basing pattern. I think there's nothing really to do at the moment on this one, so we'll kind of leave that one be as we take a look at that next. So we have a couple of levels in the ES and the NQ that are fairly far away, but some other things that are a bit closer. Hopefully you're letting your profits run on some of these positions, but you've taken some money off the table as well, so that you can kind of balance things out. And remember, it's always better to have multiple contracts or multiple lots or whatever it is than it is to just kind of throw your eggs into one basket. So for example, on that euro trade I just talked about, if all you have is one contract, if all you did was short one contract of the euro, well, then you move your stop down here and you're only going to make it to there. But if you took two contracts, maybe you take money off the table right now and move your remaining contract stop down to here, right? If you took three contracts, you take one contract off the table, the second contract and third contracts, you move down to here. You take another contract off the table right there. So you're going to be able to do a lot more when you have multiple contract levels. Well, the hard part with futures is that greatly increases your risk. Well, don't trade the futures contract, right? There's nothing that says you have to trade the futures contract. And that's really where, having the flexibility to be able to shift out of the 6E to the Euro USD is good, right? Because a lot of people say, "Oh, I don't trade forex." Why? If you trade futures, why wouldn't you trade forex, right? And so just something to consider that when I'm already analyzing these markets, there's no reason not to trade the forex equivalent on these markets. So because it can give you the ability to trade multiple lots and multiple contracts, and that's a very important part. So those are one of the things that we'll talk about tonight in our live Q&A session. So if you're a Traders Army subscriber, tonight at 7 p.m. Central, we have a live Q&A session. If you're not a Traders Army subscriber, go to tradersarmy.com today, learn a bit more. We've actually got a promo. Trade Up is our promo code this month, and it can get you 60% off your first month's subscription. So go to tradersarmy.com, promo code Trade Up. So hope you guys all have an absolutely great day, and I will see you soon. Later.